Here's a case about how we turned a complex succession challenge that involves properties abroad, minor kids, and family dynamics into a solid wealth building plan with a life insurance of $7 million US. Kabir, an enterprising entrepreneur, ventured to Azerbaijan about 20 years ago, where he built a thriving business in the region's oil and gas sector. Back then, Kabir found love and got married. That first marriage was a short one. It ended very quickly in an amicable divorce. A few years later, he met somebody else, fell in love again, and they built a happy life together, raising 2 children. Through all of this, Kabir was consistently excelling at work and building considerable wealth. He made strategic investments in a property portfolio in his hometown Mumbai, India. Given that his wife and kids held Azerbaijani nationality, he opted to register those properties in India under his father's name. However, this decision brought an added layer of complexity. You see, Kabir's brother, who also lived in India, wasn't actively engaged in productive pursuits and relied on their retired father for support. And, well, all the properties are currently registered in Kabir's father's name in India, presenting a potential risk for Kabir. He was pretty convinced that his brother wouldn't let those assets slip out of his hands that easily. If anything happened to Kabir, he knew that the chances that his wife and children would be able to access those assets or the capital within them was little to none. The whole situation was a touchy subject. Most family dynamics are, and one that he couldn't openly broach with his father. Further, about 13 years into his second marriage, Kabir and his second wife also decided to separate. Now Kabir faces a few challenges. Here was his concern. What happens if he drops dead tomorrow? The property portfolio in his father's name might not be easily accessible to his children. The cash reserves sitting in India might be hard to access for his children too. Seeing as his kids are still minors, they're also too young to manage the sale of the business, the property, and handling of tasks like accessing bank accounts or looking at investment portfolios. After long discussions with Kabir, I outlined the clearest path forward that I could see. I recommended that Kabir sells his properties in India and slowly move the money back to Azerbaijan. To ensure that he doesn't ruffle too many feathers, when it came to family, he could frame the move as a much-needed capital injection into the business in Azerbaijan. But then the big question loomed: what on earth does he do with all that cash in Azerbaijan? He needed to create a sound investment plan that would grow his assets and make it easily accessible to his children upon his death. You know where I'm going with this, don't you? The obvious solution here for Kabir was to get a substantial life insurance policy in place. Kabir agreed, and we started the process of securing an offer from a life insurance company. Based on Kabir's studied success in business, his net worth and financial standing, as well as his outstandingly clean bill of health, Kabir got offered a respectable $7 million of life cover. He also got offered super preferred rates, which is the best preferred pricing tier. So he had a decision to make. Should he go for the cover? Did he need all of it? If you've been following my content for a while, you know that life insurance can be a power tool in your financial toolkit. But the thing is, it comes with a finite window of availability, and it literally gets more expensive with each passing day. So my advice to him was, kick off the life insurance policy at the $7 million mark. Secure as much cover as you possibly can. This move ensures that Kabir's 2 boys would get $3.5 million each upon his death. While Kabir absolutely has the liquidity to pay the premiums out of his pocket, he plans to gradually divest from the property portfolio in India, repatriate the funds back to Azerbaijan, and use this money to complete the life insurance premium payments. He also drew up a will simultaneously, naming his wife as the guardian for their children and his best friend, who happens to be his banker, as the executor of the will. This setup ensures that if anything happens to him, his wife takes charge of the kids. The life insurance payout will flow into the trust he established for the kids. The returns from the $7 million will serve as a financial cushion for the children. The simple case underscores a point we made a while back about life insurance for single or divorced parents. Cases like Kabir are like a nod to a solid wealth building plan. They're testament to the fact that a little planning can go a long way. Hit subscribe for more case studies like this and to learn about how successful high net worth entrepreneurs and executives manage and make their biggest financial decisions.